Good morning, everybody. Welcome to the ARMR Report morning edition. This is our morning meeting, getting you guys ready for the trading session. This show is always about stock market investing. We're talking about investing in the millennial age. That means we have to combine traditional tools of fundamental analysis and the old versions of breaking down balance sheets and income statements and chatting with management teams of companies, and combine it with algorithms to help us execute correctly, put on risk at the right time, take risk off. Okay, morning meetings I try to keep short and sweet. We go over what the markets are doing at the open and how we're going to handle it. At 12 o'clock, I'll be back to get into more detail about the themes we're investing in and how we're building our portfolios. This is a live trading desk. All the information I'm sharing with you, I use every day managing my own capital and that of high net worth investors. All the assets are managed through Interactive Brokers. So that's our affiliation. All right. Those of you who've been following this show, I really appreciate you following the ARMR Report. Let me catch up some of you new guys who are just joining us. We have been stalking the bear for a couple of weeks now. We believe on our trading desk we're still in a bear market. We think it's useless when shows like CNBC talk about how the S&P goes in and out of correction mode. That's a whole bunch of baloney. What we're looking at is a downtrending market for every index, downtrending 50-day, downtrending 200-day moving averages. We had a rip higher off of the low after a collapse in December. Totally normal. So we're overshooting on the upside after we overshot on the downside of this trend. So here we are at the top of the trend. We've peaked out above it a little bit, sold off, gapped up on Friday, double top. Now we're gapping down this morning. So the Dow, the S&P, the NASDAQ, the small cap index, across the board gap downs. We're looking at gap downs of almost 1% on the Dow. This is going to be a big sell-off. Anything more than 0.5% at the open is a big sell-off at the open. How do we trade it on our desk? Okay, putting aside our longer-term view of a bear market, we believe this is a bear market. So if you want to know how we're invested, you can go to our website, rosenthalcapital.com. We have 3 model portfolios at Interactive Brokers that anybody with an IB account can link to and immediately begin using proprietary algorithms to help manage their risk. And each of those, we've updated them recently, actually Friday, so you can see exactly what we own in the portfolio. We're carrying a lot of cash. These are investment portfolios, multi-week, month, year developments in these portfolios. That's what we're trying to do. So you can see we have a lot of cash. You can see that we're short. Okay, so up to 30% short in our most aggressive account. And we're short the Dow and the small cap index. The Dow's dropping 1%. Caterpillar had a nasty earnings announcement. Okay, we're into the earnings season. There's a lot of uncertainty. We expect a lot of negative earnings announcements. Intel last week, stock was down 7%. Okay, we have a couple great earnings announcements. Xilinx went through the roof, up almost 20%. Starbucks was up. Okay, but overall, if we double top right here at the top of the downtrend and we get a series of earnings announcements with perhaps a little bit of negative conversations on the conference calls about future growth, and we get back into the downtrend, it's just an ideal opportunity here to be short. So we're short right here. And we're right up against our threshold to cover. But these are investment shorts. How do we handle the day trading of a gap down? We look to go long gap downs and we look to short gap ups for intraday trades. And that's even doubly true if our investment portfolio is geared towards a bear market. So we're short the market coming into today. We're long precious metals. I'll get to that in a minute. That's our biggest exposure on the long side. These are bear market positions. So it behooves us it helps us to look long on gap down days, right? Because we're capturing alpha. The market's gapping down and we're short. Gold and silver stocks are going up. We have a lot of alpha at the open. So if we get the right setup, the right trigger for the long side today, we get long, balance out our account for the day, look to capture some of that alpha. Our favorite trigger here is gap downs. We look for excessive volume. These are algorithmic strategies we're using, are proprietary to our trading desk. When we get that right volume scenario and a positive close above the high of that bar, we look to get long. We have our stops set up and we have our targets where we book profits on the way up. So from a day trading level, I'm looking on the long side today. From an investment portfolio stance, we continue to look short as we stalk this bear market, as we believe we're going to head back down to the lows of December. Okay? That's our setup today. I wish you guys the best of luck. I'll be back on here 12 o'clock noon to go over our precious metal commitments. Very important show at noon. Suffice it to say, the time to own metals is now. And I'll go over it in more detail. Have a great day of trading. Be safe out there with your investment portfolio. We are in a risk-off situation across the board on our big index algorithms, and we're looking for weaker prices that we can then begin to build portfolios and go long for the long term. But we need to see that weakness first, and we like to buy weakness on this desk and sell strength. All right, guys, good luck.